Hey, it's Orlin, and this is Brief Speak. Today, we're talking about markets in turmoil. So let's get right into it. Oil prices just spiked over 7%. U.S. crude hit $72.98 a barrel, Brent's at $74.23. That's a big move, and it's all about the latest violence in the Middle East. Israel's attack on Iranian nuclear and military targets has everyone on edge, and, honestly, energy markets are feeling it first. The big fear? Disrupted Iranian exports. Iran's a major oil producer, even though sanctions have kept a lid on how much they can actually sell. But if this conflict widens, it could slow the flow of Iranian oil even more. And then there's the Strait of Hormuz. It's this narrow waterway off Iran's coast. And, I always forget the exact stat, but something like a fifth of the world's oil passes through there. If that gets blocked or even threatened, prices can go haywire. We've seen this before. Back in 2019, there were those tanker attacks in the Strait of Hormuz. Oil prices jumped, everyone panicked, and then, once it looked like things weren't escalating, prices settled back down. So right now, it's a lot of waiting to see what happens next. Is this a short-term shock, or is it the start of something bigger? I mean, nobody really needs this kind of economic shock, but here we are. Okay, so oil's up, but stocks? Not so much. The S&P 500 dropped 1.1%. The Dow fell 769 points, and the Nasdaq lost 1.3%. That's a pretty sharp move, even if it's not the worst we've seen this year. Investors are basically running away from risk right now. But it's not all red on the screen. Energy giants like ExxonMobil and ConocoPhillips actually gained. Exxon was up 2.2%. ConocoPhillips 2.4%. Makes sense, right? Higher oil prices usually mean bigger profits for them. On the flip side, companies that burn a lot of fuel or rely on people traveling, like Carnival, United Airlines, Norwegian Cruise Line, they all took a hit. Carnival dropped almost 5%. United Airlines down 4.4%. It's like, if your business depends on cheap oil or confident travelers, today was not your day. And then, defense contractors, Lockheed Martin, Northrop Grumman, RTX, they all jumped more than 3%. It's a pattern we've seen before. During the 2022 Ukraine crisis, defense stocks surged as well. Conflict tends to reshape which sectors win and lose, and, yeah, it's a little unsettling how predictable that can be. So, when markets get spooked, where does the money go? Gold, for one. It rose 1.4% as investors looked for a safe place to park their cash. Usually, you'd also see U.S. Treasury prices rise, but this time, they actually fell, which pushed yields up. That's partly because people are worried that higher oil prices could stoke inflation. Inflation's been pretty tame lately, close to the Fed's 2% target, but now there are jitters it could pick up again, especially with those Trump-era tariffs still in the mix. The 10-year Treasury yield climbed to 4.41%. Higher yields make it more expensive to borrow, and they can drag down stock prices even more. It's like every time you think you've got a handle on one risk, another one pops up. Oh, and here's a twist. Consumer sentiment actually improved for the first time in 6 months, according to the University of Michigan. Maybe that's because some tariffs got paused, or maybe people are just feeling a little more optimistic. But even with that, volatility is sticking around. Markets in France and Germany dropped too, so it's not just a U.S. thing. When I look at all this through my macro analysis toolkit, it's clear. Inflation risks and investor psychology are driving these abrupt shifts in demand for safe assets. Sometimes it's about the data, sometimes it's just about how people feel. And, honestly, that's what keeps markets unpredictable. All right, that's it for this episode of Brief Speak. We'll keep tracking the fallout and, well, see where the next shockwave lands. Catch you next time.